A very warm welcome to all investors present here. For the first time, we are revealing something special. Discover the sectors set to outperform in 2026 and learn how to rotate your capital with a clear, actionable roadmap. Towards the end, we'll also be having Q&A session. Over to you, Dr. Mood.
Thanks a lot, Jason. Today is a very exciting day. There is a landmark discussion that I'm going to have with you today. There is a very startling outcome that we've seen when we've ran the sector score. So what is the sector score? I'm going to explain you briefly, then I have a detailed presentation, which is not a gut feeling of what sectors look good, but what we've done is as per the following method. The first thing is that so far you need to understand MarketsMojo has been a top-up, bottoms-up player, which basically means that we look at a stock, we don't look at the sector, and we say that we have to be invested in the top stock at any given point in time. The sector may be doing well or may not be doing well, but we hope that the stock becomes an outlier in the sector. So that has been the last 10-year journey of MarketsMojo. Now, around a year back, I personally, along with my CTO, started working on trying to figure out whether we can consolidate all of this intelligence that we have at a stock level, at a sector level, and create a sector bias when we are looking at top stocks. So whether that works or it doesn't work. The results that we saw in the month of Jan 2025, after working 6 months on this, was fabulous. It was too good to believe. And we said that we cannot launch this. Let's look at the next 1 year and let's see whether this hypothesis that we are putting through is something that is actually working in real life or not. So over the last 1 year, we've not used the sector intelligence to adjust the rating for the stock. We were watching it. We saw it for almost 4 quarters. And today what you're going to see is the result of those 4 quarters. And towards the end of this presentation, I'm going to announce whether we are going to use sector as an intelligence, which can be a very, very big change over the last 10 years of journey of MarketsMojo for the next journey to go to the next leg, which is have a sector bias when you're looking at a stock or a stock selection. So that's how we are going to proceed. What I'm going to show you today, the presentation is in 4 parts. The first part of the presentation is the method that we've used. A lot of times you have confusion on what method we use. I'm going to show you the method for the first time that we are using. I'm going to take a pause and I will give you time to ask me questions on your method. If the method is something that you understand or not. Once you understand and once you say that, okay, let's go ahead, then I will show you actual results that we've seen over the last 4 quarters since the time that we created this and we started evaluating this particular parameter. For all of you who do not know, when we had launched score as well, we had waited for 1 year to see the impact of the scores before we launched it. So it is our normal philosophy and practice that when we launch something, it has to show us actual returns or results for a period of time. There are a lot of experiments that we do where the experiments doesn't work. There are some experiments which works. Towards the end of the presentation, we'll know whether this experiment is working or not working. And yes, if it works, then I will give you today the top 5 sectors that we need to closely watch for 2026. And as the closing session of the calendar year 2025, as I promised you yesterday, I will give you the 10 stocks which are potential stocks within these sectors that can be beneficial for us to hold it as an investor. What I'm also going to do is, I know how much you had loved the Diwali portfolio. I'm going to store that in my personal portfolio, these 10 stocks that we will talk tomorrow. And I will do a review every quarter to see if any stock goes out or it remains there. The reason the quarterly review and not a monthly review is something that I will tell you when I look at the methodology that we are using out here. With that note, let's get onto this very, very exciting thing that we're doing today. I think possibly in the last 1 year, this particular session would be the most exciting for me personally, to first time showcase you an internal blueprint of what we're doing and how it can change the life of Mojo One, Mojo professional investors in the coming year. Let's quickly go to the disclaimer. All information presented in this webinar should be used as a resource to enhance your own research and understanding. Nothing discussed should be considered as direct investment advice. Investment in securities is subject to market risk. Past performance should not be construed as a guarantee for future returns. Investments in equity and equity-related securities involve a high degree of risk. Only invest funds that you can afford to lose. And we strongly advise all participants to consult with certified financial experts before making any investment decision. I'm also happy to announce that we are ending the offer today. So we are tonight ending the offer. What are these two offers that we had given? These were the lowest COVID time offers that we had resurfaced. We are giving Mojo One Access, the full Mojo One Access, which means that Mojo One plus stock of the week at 14,999, along with which we are giving complimentary 2 years free, which means that once you pay 14,999, which itself is lower than the market price of 34,999, you just don't get it at 14,999, but you get 2 years of extra of Mojo One in stock of the week free, which is overall an 86% discount that we've given. And this is the last time that we had given this was in 2020. This link will go off today and the offer will end tonight. So if you have extended, great. If you have not extended, there would be no better time to extend this particular offer. For users who already are members, you can use this 3 years to extend your membership by 3 years. So don't think that this is just something which I'm already a member, so it is not of use to me. A lot of our members buy multiple packages. They typically don't buy 14,999 for once, they buy it twice, because then they get 6-year extension onto their expiry date of the package. So great advantage out there. My personal favorite, as I told you, that is also ending tonight, India plus the US pack. This has the whole of India, which means Mojo One plus stock of the week, plus the whole of US with around 5 model portfolios, and the whole US research embedded into this particular package, which is for 19,999. You get extra 2 years absolutely free if you take this for the whole of India and the whole of US, which is a 90% discount. This package we've never done before, and maybe we will not do it again. But this is one of the lowest packages that we've done over the last 5 years. We never had this package. We introduced for the first time. And according to me, if you are an India member, you should look at extending to US as well. The third package that we were running was US, where we were giving 4 years free at 19,999, has now expired. So these are the two packages that will expire tonight. If you've not enrolled, immediately please enroll. Use the link only on the webinars, because these links are not available on the website. The links are right there below the video box. All right. So let's look at the objective. What are we trying to do here? We are trying to create a stock score. There are 2 types of scores that are already available on MarketsMojo today. One is the stock score, and the second is the portfolio score. My dream has been that can we come out with a sector score, and in next year itself, can I come out with a country score, considering the whole macros and everything. So we will know as a country, as sector, and as stock. Can we just make that whole approach much more sharper, which can be a worldwide differentiator for MarketsMojo? The first step is to move on to the sector score. As I told you, it's a 1-year exercise. It's a 1-year real runtime that we've seen on the methodology that we've used. Whether it works or not is something that we will observe now. This presentation will guide you through evolution of the scoring methodology and demonstrate how sector level analysis can enhance your investment decision, or whether top sectors and top stocks work better than just top stocks. I repeat, whether including the layer of a top sector And within that, top stocks works better than just top stocks without a sector layer. That is the purpose of today's exercise. And finally, we will dovetail into what are the sectors that we need to watch out now in the next or in the coming quarter. Quickly, 2016, we introduced 4 dots. 2020, we introduced the stock score. Somewhere 2021, we introduced the portfolio score. And hopefully, in 2026, we may launch the sector score and a separate section on the website, which may be a sector score website and top stocks within those sectors. Okay, I'm going to spend a little time on this slide to explain you the method that we use, because we never go into detail of the method, we go into results straight. And after that, I can take a little bit of a pause to take 2-3 questions only on the method if you've not understood the method. And then we will proceed towards the rest of the presentation. So we are doing a little bit of a change here. We are having 2 Q&A sessions, one immediately after the method and one towards the end when we announce the sectors out there. Now, in terms of methods, there are 4 methods that we've seen out here. We have put 4 parameters that we use to evaluate this whole sector depth. Parameter number 1, can I have the full screen, please? Quarterly calculation cycle. So we are calculating the sector score, which may change from a quarter-on-quarter basis. This may not be a real-time change of sector score because you're talking of a large sector. We have excluded sectors where the market caps are less than 1 lakh crores because that can be very small sectors which may result in liquidity issues. So we have taken sectors where the market caps are in excess of 1 lakh crores. So quarterly calculation cycle, the sector gets revised every quarter. The main factor on which we revise the sector is the fundamental and the technical momentum, which means that if I have a sector where there are, say, 16 companies, I have the results of these 16 companies. I accumulate that at a sector level and see whether the overall sector is in a fundamental momentum or not. So that gives me a fundamental score. You may call it as a CFT score of the sector, which can change on a quarter-on-quarter basis. The reason we need to look at the CFT score is primarily because of the cyclicity of these sectors. The sector rotation can be very fast. In the whole sector analysis that we've seen, not apart from 2 sectors who stayed consistent in around 2 quarters, not many sectors were common, which shows us very clearly that the results that keep coming in quarter on quarter, there are different sectors which are performing at very different pace. So the evaluation, it's a quarterly calculation cycle. The evaluation factors that we've done is 2. One is CFT and technical on the sector, and the weights can be 0 to 100%. It can never be 100% on technical. So typically we did various calculations in terms of how the fundamental factor should get weighted and how the technical factor should get weighted. The reason we have to include technicals here is that although the fundamental factor may tell you that the sector is in focus, but a technical parameter, which is more of a forward-looking parameter, may tell us that there is another sector which is coming in, which may be becoming a part of this particular list. So the score, although it changes, it doesn't change that much because you're talking about mix of companies rather than one company, and the mix of sector is not so volatile if there are some radical events. But mostly these sectors will change on a quarter-on-quarter basis, but internally the score can keep moving up or down by some points. Then what we did is that once we had the top 5 sectors of the last 4 quarters, we picked up the top scoring companies only in those sectors. Right? So if I pick up a sector and the top scoring companies, if there are 5 sectors, I will say, okay, let's pick up all the companies which had a score of 70 and above, which is buy and above. And if I had bought all of those companies, what would have happened in that quarter? So sector, 5 sectors, top sectors, and within those 5 sectors, 70 and above, every single company we picked up. And we said, how many of these companies can come? You'll be surprised that at a given point of time, there were 5 companies or 10 companies. So I think yesterday you guys were discussing that if you have to invest in a portfolio, maybe this can be a great way to look at this particular list as a portfolio. And it can actually, I got this idea from one of the people that I was talking in the industry that can we have 3-month portfolios? That every 3 months we wind off the position and look at the next 3 months. And restart the portfolio if that is something that we can do on a 3 month kind of a thing, which is more like stock of the week kind of a thing. But in sector portfolios which are sector specific 3-month portfolios, you have the opportunity, you go, but let's see if the opportunity materializes. So top companies were only taken, 70 and above were taken. Every single company that came in were taken. How did we do the performance measurement? All the returns that we calculated was quarter on quarter. So quarter started, 5 sectors came, X number of companies came, we saw the return, quarter ended, we looked at the benchmark return, we looked at the returns of these companies that were there in that particular sector. So I'm going to show you these quarter results to try and ascertain whether this is working. What is our returns that these stocks created if you were to put the sector layer, and whether they were able to create alpha, and whether there were some very high performers out there, very low performers out there, what was the drawdown out there, max drawdown in these stocks. We are going to see that. Before I dive into now the actual numbers, let's see if you have some questions on this.
I can see a lot of investors asking questions, but we'll pick those questions later as well. These questions would be strictly on the methodology. We've got one particularly. Yeah, so this question by Devesh P. Do you use the quality dot of a company while doing the sector score?
No, we don't use that. We saw that the quality is a very fast, is not a very fast parameter, right? So when you're looking at stock selection, obviously the quality parameter is used. In sector, what we're trying to create out here, Devesh, it's a very intelligent question you asked. That in sectors, we're trying to create the sectors in vogue. But once we catch the sector in vogue, obviously when we are taking 70 and above companies, the quality of the stock is out there. So we do not aggregate the quality at a sector level. We aggregate the fundamental and the technical momentum to try and figure out if there's any change that is happening fundamentally and technically on the sector. We do not take the quality parameter into consideration.
Okay, this next question by Frank. Greetings, Mohit. Which models or frameworks are applied to compare the sectors? Is there any factor analysis, regression, or relative strength models? Also, how do you adjust for cyclical versus structural trends when evaluating the sector performance?
So, Frank, we do point-to-point calculation. In technicals, we do a lot of modeling to figure out the technical trend out there. Fundamentally, we go with the basics. We look at, our CFT dot is one of the best performing dots as we've seen over the last almost 9 years now. So we look at aggregation of the CFTs at a sector level. Now, what we also do is we also market cap weighted, which basically means that if a sector has large cap, mid cap, small caps out there, I may market cap weighted and see whether I should do a market cap weighted index or I should do a equal weight index. So there are around 72, 73 types of different combinations we look at when we look at when we look at this. Our most used parameter is the regression analysis. So you're right, we do regression analysis to figure out that we are picking up the right things, and we look at volatility, we look at betas, we look at drawdowns, we look at all these parameters when we form up a simple method of evaluation.
Okay, I'll move to the next question by Venkatachalam. Is the sector methodology applicable to, let's say, stock of the week, stock of the month, model portfolio infinity now?
See, currently nothing. Mr. Venkataraman, currently nothing. I'm very excited today because you never know, from next month onwards, we may start including this. We have to now go down whether the sector selection works along with clean scores. The answer is what we are going to see today. What we are now going to do is layering of this, because this is working on pure score, which means that 70 and above. but various products of MarketsMojo, which is like turnaround, right? Turnaround, you typically don't pick up a buy company. You may pick up a whole company also. If you look at, Mojo stocks, you may go for stocks only approach works or a sector only approach works. So what we're going to do as next phase is we are going to implement this slowly across all parameters. On certain products it may work very well, certain products it may not work very well. So currently this parameter is the first time I'm discussing with you, it is not implemented. It may get implemented on some or all of the offerings that we have, depending on how we see success of each and every strategy moving forward.
Okay, I'll just pick this last one before we could move forward. This is by Neha Goel. So basically, we will create a basket of stocks in a particular sector that is in momentum.
So Neha, see, what you're talking about is a portfolio approach. So I personally believe that there's a lot of scope in what you're saying. That, if we look at the sectors, if we say that we want to be in the top stocks in the top 5 sectors at any given point in time, this strategy works. But this strategy can have a long-term churn. So it is not a buy and hold kind of a strategy. I personally believe it's a quarter strategy. It's a 1 quarter book out and move. Provided the sector stays out there, then you stay invested out there. So I'm going to productize this in some way to try and see if we can create portfolios out there. The first thing that I'm going to do is create the first portfolio tomorrow. And I'm going to track that live with you every quarter. So I'm going to do a year-end portfolio tomorrow itself, which we will then track it for the first quarter. And meanwhile, when that is a manual process, we'll try and see how we can productize this within the MarketsMojo framework to try and see if whether you can have top sector portfolios out there. That is the next step. So the steps are whether the method works. That answer we're going to get today. The second step is whether that method can be applied at the score level itself. So can a 70 become a 74 because the sector is good? Can a 70 become 65 because the sector is not good? We'll have to do that, right? Once the score gets adjusted with the sector layer, then we will see whether then either you do a change in the selection process of all the products, or you may not want to do the change because you already displayed the sector within the stock score. So let's go step by step, and then we'll see whether portfolios with sector biases can work. But as promised, I will show you the first portfolio basis this particular approach tomorrow itself, and we will also track it diligently on a quarter-on-quarter basis. Again, the reason that I was saying quarter-on-quarter is fundamentally now you know that these sectors only change on a quarter-on-quarter basis. So possible exits and new entries will come only once a quarter. But let's now look at what we see. Let's go to the presentation.
Yeah.
So let's look at quarter 4 of 2024, because that becomes my analysis is for 2025. But quarter 4 of 2024, calendar year quarter is what I'm talking. I'm talking about the September quarter of 2024. That's when the results started coming in, we got the whole list of the sectors and we applied our IP and we rated the sectors. And I'm showing you only the top 5 sectors. The top 5 sectors were edible oil as 1, capital markets 2, fertilizers 3, heavy electrical equipments 4, aerospace and defense 5. Analysis period for sector returns and for the index return that we have taken is from 17th of Feb to 30th of May. So these are the 5 sectors that we identified. The index during this particular period was up by 10%. Edible oil was up by around 7%. Capital market during the same period was up by 25%. Fertilizers was 34%. Heavy electrical equipments was 30%. Aerospace and defense went up by 72%. So the good news on this quarter was that 4 out of 5 sectors create a huge amount of alpha. The not so good news here is that it's not working in a symphony, which is it's not that the first sector gets the highest returns. Actually speaking, if you see here, it's working as aerospace and defense, which was sector number 5, gave 72%, and then fertilizers gave 34%. So you cannot go and say that I will invest in only one sector, right? So top 5 sectors. If you look at top 5 sectors, obviously we cannot have a perfect symphony that first sector should give you the highest return and second sector and all, because things can evolve in a different way as well. But overall, this quarter looked a good quarter. This is just sectors. Now let's look at the stocks that were there, which were 70 and above. In the same period, what happened to those stocks in the same sectors? So if you see my next slide, there were these following stocks: Ajanta Soya, Mazagon Dock, Chambal Fertilizers, Deepak Fertilizers, Hitachi Energy, Skipper, BSC, Multi Commodity Exchange. Now, if you look at here, incidentally for this particular quarter, the positives of all the stocks that were above, and you can see the Mojo score on the absolute right, which is 72, 70, 71. So we've taken every single stock which was above 70 here. 100% of the stocks delivered good returns, which is positive returns, and 75%, apart from 2 stocks, 75% of the stocks delivered a big alpha. The quarter of evaluation that we're seeing, where the index grew by 10%, this grew by 37% as the average return. If I were to equal allocate money into these stocks, 37%. Now, obviously, this annualized return is just a dream, but it is 37% because it's a quarter. It is not annualized. The annualized would have been at around 146. But 37% was absolute return in this particular quarter versus the benchmark return of 10%. So far in this particular quarter, the story looked pretty handsome. Let's move on to quarter 1 of 2025. Now, if you look at quarter 1 of 2025, the sectors did change. Apart from, I think, edible oil and fertilizer, which remained there, the new sectors that came in was compressor, pump and diesel engine, automobiles, and electric appliances. The ratings was fertilizer as number 1, edible oil as number 2, compressor, pumps and diesel engines as number 3, automobiles 4, electronics and appliances as 5th. If you look at the index from 30th of May to 18th of August, which is a quarter that we're talking about here, fertilizers, the market gave 1% positive return, fertilizers gave 13% positive return, edible oil gave 6%, compressors gave 3%, automobiles gave 11%, and electronics and appliances gave 0%. So overall, again, barring one particular sector, 4 sectors worked way better than the BSE 500. Now, if you look at the top stocks within this sector that would have come at that point in time because of the score, these were the stocks: Krishna Phosphate, MB Agro, Paradeep Phosphates, TVS Motors, Dixon Technologies, Coromandalam International, Shakti Pumps, Rama Phosphates, Deepak Fertilizers, PG Electroplast, Ajanta Soy. And if you see on the right hand side again, the scores are all the stocks above 70. So you've taken 70, 71. So I've just bought the whole stocks above 70. Now in this case, the return, the benchmark return was 1%. The quarter return was 5%, which, as you know, what kind of market we are in the current year we've been. So it is a 4% alpha, which is almost 400% on the benchmark. Annualized obviously is 19%. Positive ratio was 72%. And outperformance was 63% of the stocks outperformed the index. 2 big drawdowns was PG Electroplast and Ajanta Soy, which took the returns away predominantly. If you look at otherwise Krishna Phosphates and MB Agro, all the fertilizers, top 3 fertilizers. So some of the fertilizers companies worked. So there are 5 fertilizer companies here, or rather 6 fertilizer companies. 3 came in the top 3, which is 49%, 24% and 15%. So obviously shows you sector. Coromandel gave 4%. Then you have Rama Phosphates, which was 0% return. And then you have one fertilizer company, which is Deepak Fertilizer, which was only negative. So fertilizer worked pretty decently. What did not work was, in this case, edible oil, because I think edible oil was in the second quarter coming as a sector, which is telling you that the same sector which was the top sector in the previous quarter is losing the sheen in this particular quarter, with companies falling quite drastically. So Ajanta Soya, for example, down 43%. But overall, if you were to make this 10, 12 stocks on an index of 1%, we would have still made around 5%, which is a 4% alpha. Now this is the quarter 1 of 2025. Let's look at the next quarter. Now I'm looking at quarter 2, 2025. Period is from 18th of August to 17th of November, which is the period which is just passed. If you look at here, fertilizer has gone out, edible oil has gone out. Aerospace and defense has come back as sector number 1. Gems, jewelry and watches number 2. You have oil as number 3. Housing finance company as 4. And beverages has come as 5th. BSE 500 returns at 4%. All 5 sectors better than the BSE 500 returns. And you see some bit of a symmetry out here, because your number 1 sector has given 8%, gems, jewelry and watches is 7%, oil is 5%, housing finance is 5%, beverages is 5%. Please understand these are quarter returns. If you analyze, these numbers are big. These are quarter returns that we're talking, point to point quarter returns from 18th of August to 17th of November. Let's look at 70 and above stocks, what happened here. So we had a list of around 12-13 stocks that came in. Allied Benders, Timex Group, HPCL, BPCL, Radico Khaitan, Bharat Electron, Titan Company, Garden Reach, Global Spirits, India Shell Finance, Uday Jewelry, Tilak Nagar Industries, DHP, Aptus. These are the companies that came in. Positive ratio was 57. Outperformance was 57, but if you were holding the whole basket, on an index of 4% return, you would have done double the index of 8%, which is again a big alpha. Again, the drawdowns are smaller apart from 1 or 2 companies, which is in the oil sector, which is DHP and Aptus Value Housing. Now, if I can have the screen. So far what we have done is that we have taken every single company above 70, right? What we are going to do now is try and see, which is not now in the sense I will not show it to you today, but when we firm up any philosophy, we will now see whether certain market caps like micro caps can be taken out to try and see that the drawdowns can be controlled. If you control the drawdowns, automatically your returns become better. Because if you control the 13%, the 20% negatives, obviously your overall strategy becomes way better. So we are going down to that route before we typically see whether we want to include this. Now, obviously, what is clearly coming out here is that there is definitely a merit and case for us to look at a sector layer. If I look at any quarter that I have seen, and these are not back-tested quarters, these are quarters that we've seen on a running basis. If I see running basis quarters, quarter on quarter, it is delivered better results. To just summarize these 3 quarters, let's look at these 3 slides again. Can I get the slides? So here we are talking about 37% versus a benchmark of 10%. Here we are talking about 5% versus the benchmark of 1%. And here we are talking about 8% versus the benchmark of 4%. If I were to not, broadly speaking, if I were to just do a mental math, you are talking about an annual return of around 40-45 odd percent versus an index return of around 13-14%. So I'm very happy to tell you that it gives us big hopes to try and now go widespread and see how we can adopt this in the selection process, in the stock listing process, which is typically the process of turnaround momentum, mojo stocks, and so on and so forth. And also eventually see if whether we can have short duration sector rotation portfolios for our clients, because this is not a list which is 30 stocks or something. It goes from anywhere between 7-8 stocks to maybe 15 odd stocks, which is definitely manageable by retail. Now let's come quickly. I'm setting a prelude to what we are going to do tomorrow. Let's look at the top sectors that have come now, which is Q3 as per the September quarter results. The top 5 sectors that we are observing today in that order is fintech, cables, which is electrical cables, beverages, hospital, and housing finance companies. So these are the 5 sectors through which we are going to construct our first sector-specific stock approach tomorrow, where I'll disclose to you 10 stocks out there. Let's just quickly see what's happening in these sectors and whether theoretically, not just fundamentally through the IP, but we believe in these sectors or not. So if you look at financial technologies, obviously there is explosive industry growth. The fintech industry is expected to grow at 30% CAGR, reaching nearly $1 trillion by 2030 from the current levels of 44 billion only. So this is a massive 30% growth industry that we're talking about. Digital infrastructure penetration, mobile and digital identity is going to drive the top line and the volume growth. Innovation through technology, more AI and automation is going to drive new product innovation across sectors. And obviously the investors' fancy is going to play on the fintech stocks, helping drive richer valuations or justify richer valuations moving forward. Let's look at quickly why cables. We are seeing a data center demand surge. The demand of power is going to increase substantially due to demand of data centers. This obviously gives us a cue in terms of increase of demand for cables. Real estate cable growth, at the same time demand for real estate cables is going to go up, and obviously we are getting a raw material cost advantage. One of the biggest beneficiary with the lower raw material prices, as the prediction by IEA, crude oil is expected to be in the region of $55 per barrel in the year 2026 versus 65% per barrel. You're talking about a 8-9% correction, which gives a huge pump on the raw material sourcing side to give cables a benefit out there. Let's look at the next sector, beverages. Demographic tailwinds, the rising Indian population, obviously surprising the legal drinking age, is going to drive demand for beverages, especially alcoholic. Rising disposable income, the disposable income and the influence of social media is driving demand for beverages, and premiumization trend that we are seeing, which is premium offerings are happening in the industry, which are more and more on the packaging side, has been introduced to drive up the top line and margins. One of the other factors is that we're seeing is a beer growth increase that is happening. Demand for beer is going faster than other alcoholic beverages, which will drive the top line more for brewery companies as compared to the non-brewery companies. Beers, obviously, I don't know whether you know, but come at a much higher margins. So that can also give you a good margin jump. And product innovation, new package introduction, ready to drink, cocktails, and craft spirits all are in the line of production out there, which we can see in 2026. Why hospitals? Very important. Insurance penetration. There is higher penetration of insurance, which is helping patients to go more to organized hospitals rather than to just go to the near around unorganized hospitals. There are unfortunately climate-driven demands because of global warming. Number of people need medical attention are increasing year on year. There is a revenue growth per bed, that we are seeing on the occupied bed has been increasing for industry, helping them, this industry expand their operating margins. Industry consolidation, a lot of consolidation is happening in the industry, which the newer players or the private equity firms coming in, which are betting big on the hospitals and the growth of the hospital as a sector. Let's look at housing finance company. Rate cut benefit, 125 basis cut done by RBI has helped to reduce EMIs for housing finance loans. There is urban migration that is happening, people migrating from rural to urban. Obviously, that is driving growth for housing, helping housing finance companies to increase their asset under lendings. Lower borrowing cost and reasonable lending is helping industry to expand their net interest margins. And there is a asset quality improvement as per the latest RBI data, suggests that the NPA levels within the housing finance company have moderated, reducing the credit cost for the housing finance companies. So these are today's discussion ending points, which are the 5 sectors that we've spoken about. What we are going to do tomorrow is to try and circle back and give you 10 stocks. It can be 11, it can be 9, it can be 12. So don't hold me on those 10 stocks. And this time we are going to track that on a quarterly basis, try and see what's happening. Parallelly, as a plan, we are going to evaluate whether sector can become a part of sector score, or whether it needs to remain segment. You need to launch a separate section where we can show the top sectors and the top stocks in those sectors, and how we will integrate this into the Mojo One products, and also whether a 3-month rolling portfolio would typically make sense. All of that will be our key Q1 things to do in the coming year. Before we move on to Q&A, the announcement, both the offers are ending tonight. So thank you for all your support. We were giving Mojo One along with stock of the week at 14,999. Along with that, we were from our side giving 2 years free of Mojo One and stock of the week. So this is a 3-year package with an 86% discount. As I said, we did this only during COVID times. And this package is ending tonight, is only available through the link. The link will expire if you're not subscribing. And the second is the India and US package, which is for 19,999, where this is a 90% discount, plus you get 2 years extra. So you pay 19,999 for 3 years. Make sure that you would have subscribed, not once, maybe twice also, because you get a 6-year benefit. For people, a lot of people ask us, I already have a membership 1 year, why should I buy? If you have a membership 1 year, these offers are something that happens once in a year for us. If you do that, then you can extend your package or early extend your package by another 3 years, or for that matter, even 6 years. With that note, let's go on to the Q&A.
Okay, I'll start off with this first question. Yeah, this is by Y. Venkateshwara Reddy. Selection of sector is having immense importance. After selecting the sector, it may be better to select the particular stock.
Yes, sir. That's exactly what this presentation was. That selection of stock looks like giving a good, direction to what stocks you need to pick up. So what you're saying is absolutely right. What can happen is there can be stocks which, despite the sector not being the top sector, can still move. So I am not saying that this is the only approach, but this can add to the whole zing of selection of stocks basis at least knowing which way the sector is going. Now, the sector, it's fundamental growth of the sector, right? So it's fundamental growth of the sector. We do consider technicals out there, but I can tell you that more weight is given to the fundamental growth of the sector. So it gives us a little bit of surety that we are invested in a sector, in a top stock in a sector, where the sector itself is growing very well. So this is according to me something that is going to work. And as I said, that if you can top it up with the macros and come out with a country score and say that where India is going in terms of listed markets, that can also give us a better approach towards asset allocation. That equity asset allocation can move up or down depending on macros and depending on sectors and depending on the stock. So this is a very, very exciting and evolving story that we're going to create.
Okay, moving to this next question. This is by Rajiv Pal. Hi Mohit, suppose we implement the sector scores shortly, then will these sector scores also be included as a parameter or maybe influence the Mojo score of a stock?
It can, sir. Rajiv, that's exactly what I was saying. That there is two ways of dealing with it. It can be information only, or I can just modulate the score of the stock basis of the sector that it is in, right? Now we have to see which is a better approach. I'm not saying which is a better approach primarily because I don't want the stock score to keep fluctuating all more and more. So we'll have to do a very, very deep dive. Currently, my only objective was to show you that sector selection works. How we implement it, leave it to us. But this is not something which is going to be a very big exercise. We will come out with a faster way of making sure that this gets implemented. Ideally speaking, it should get implemented at the stock score level. But if we see our overall success rates and index returns are reducing, we'll not do that. But we'll do some kind of a overweight or underweight on that stock depending on the sector preference out there. So I don't have a firm answer to this, but I'll tell you that we'll be very different in the way we talk within a couple of weeks' time or maybe 3 weeks' time.
Okay, this next question by Lakshmi. Hi Mohit sir, we have been given details about the sector, that this sector will be good. But under that sector, which stock is better? That's hard to find, as the retail investors can make mistakes here. In MarketsMojo screener, can we put a functionality that will have sector level screening? Like if I will select FMCG, then I will have a list of best stock in that sector.
Sir, Mr. Lakshmi, we have that still. We had that 8 years back. So you can go to the Mojo screener and you can look at any sector, select a sector, and then you can say that give me the top stock. So quality has to be this, valuation has to be this. I think I did a demo yesterday. If you want, I can do a demo today also. But give me a demo for a second, please. So I'm going to the screener once again. I think suddenly screener is becoming a very favorite product of ours. Logic screener. Here, if you see, I have industries. So you actually spoke about FMCG. So let me just clear all filters. I will go and select the FMCG industry for you. And then I will say, so I get total of 182 stocks here in the FMCG industry. Then I can say, show me only excellent and good quality stocks. Show me, financial trend to be outstanding, for example. Or maybe very positive, right? And show me technicals to be bullish and mildly bullish. So you have one company that comes in out there. It's a micro cap. So now if you say, let me expand my parameters. So quality, I'm not going to expand, which is okay. Valuation, I can even go to very attractive. And fair. Financial trend, I can take even positive. You have all of these companies that come up in the FMCG sector. So you have 4 companies out of 161 that you've shortlisted out here. So you have the industry. You can also have the market cap. Give me only mid cap companies. So there are no mid caps. Give me large caps and mid caps. No large caps. So small caps. So you have 3 companies which are small caps. So I can reduce these 2. And you have one more company that gets added if it's a micro cap. So you have that, sir, already. It has been there, across. In fact, you can do the same thing for any country as well here. But all of this is already there. You can also look at results quarter if you want to put in some parameters out there. So this is a very detailed product that you can use. You can also, what you can do is, I don't know whether you know this button. You can store the filter. Yeah, so I can say FMCG list 1. And if any stock that comes into this, you can just go and see that after the results, if the more stocks have come into your filter. So your filter is saved. So I have these filters that I have. And you can just keep seeing your filter at any point. So that is already there.
Next question by Rigved. Hi, which is your personal favorite sector?
My personal favorite sector is what my IP says, sir. Rigved, I'm not at the liberty of giving my personal views. I will go as per what the views of Markets Mojo is. So my personal sectors will be the same as what Markets Mojo would say. I believe in the IP.
Okay, moving to this next question by Garimesh. Hi Mohit, can you reveal one stock if possible? Rest can be revealed tomorrow.
No, sir. Garimesh ji, no, we are going to do a reveal of all the stocks tomorrow itself. And mostly what I'm going to try and do is these stocks may not be in the Mojo 1 list. I had promised you I'll do a pre-list, which means that stocks that possibly can get into the Mojo 1 products of Mojo stocks and hidden turnaround and reliable. So I'm trying to make my life difficult, not give you existing Mojo 1 stocks that are there. We can give you that. I don't know whether I'll find so many stocks but now we've got 5 sectors. So our shortlist is there. And we are going to look at stocks that possibly can become the Mojo 1 stock, possibly can become a Mojo stock, possibly can become a reliable, possibly can become a turnaround, possibly can become a momentum now. So tomorrow is a great exercise to be a part of.
Okay, this next question, this is by Ramsey. So we select the sectors and corresponding top stocks, say around first day of every quarter, let's say Jan 1st, and look to recreate the portfolio on April 1st. But would there be any changes, especially during the results of the selected stocks?
No. So the quarter doesn't work like that because mostly the results come out with a little delay, right? So we create a portfolio around Feb because that's when all the results are out. Because the issue out here, Vamsi, is that unless, let's assume there are 60 companies in a sector, the sector score starts building up. 5 companies result come out, then another 5 come out. I have to actually wait for the whole sector results to come out for me to build up the sector score. So this can happen when predominantly all the companies have declared the result. That's when the final result will come out. It's like zoning and elections. I cannot say that which party will come in focus unless all the states are aligning and the numbers are coming out. So this is not a Jan to a point-to-point portfolio. This will happen somewhere around, say, mid-Feb. If you're talking about the last quarter of the year. If you're talking about the third quarter, it can be towards October when most of the results are out. So it will align like that. Most of the time, what we've seen is that the stocks will remain there. So and obviously if you're using a portfolio approach, then we have to put the portfolio parameters that the stock score comes from 70 to 60. So should we sell even if the sector is great? All of those are things we have to still test. Hypothesis we are testing today is the sector layer gives a better result. The answer is, according to me, unbelievably good. If this was backtesting, I would have not even sat in front of you. But this is the actual things that we've seen. So I'm very happy that we've seen that. Now we have a lot of work carved out for us to try and display this. I have personally put this into operation on, as I said, towards Jan 2025 because we wanted to observe it. We wanted it to settle down. The result, if I were to see in Jan 2025, was at a very different level. It was like completely unbelievable. That's why I didn't believe it. We said that let's wait and see this. But let's just wait because there are multiple steps we need to go in for.
Okay, moving on to this next question by SS Nandari. In your own view, what could be the key limitations of the methodology? Which data points, if any, are not considered? Example, let's say unlisted companies or diversified stocks.
So I think there are certain, one of the data points which Mr. Namdari may not be a part of this is that where, you're talking about a company which is into multiple businesses and fall into multiple sectors. So sometimes the sector classification itself is not right. What we do here is some of the stocks we classify ourselves. Because we personally believe that a stock which was a textile company, for example, classified as textile company is actually into NBFC business. So sector classification becomes a challenge, and right at the beginning when we started Markets Mojo, we said that we need to put our own layer of sometimes doing a sector selection because business segmentation doesn't tell me that this particular company is in this sector. a lot of companies which are typically textile companies are basically lending money because their non-operating incomes are way higher than their operating income. So how can you call them as textile companies? So that's challenge number one. Challenge number two is that the sector rotation is so high, it becomes difficult for us to run a portfolio approach on a long-term basis because churn will be very high. So, if you see only two sectors remain consistent for 2 quarters in the quarters that I've shown you. So, in 4 quarters, you had what? A total of say 20 sectors, out of which 2 sectors were only there, 18 sectors have revolved. Right, so there's a lot of churn in this. So essentially, we'll have to, in this kind of a scenario, the churn is not 1x, 2x, the churn can be high. The third thing that we have to see is that I may start a sector portfolio. I am seeing point-to-point returns, but if I were to hold, even if the sector goes out, because the stocks, see, currently what you're saying is that you're undermining the stock score approach. Let's take an example. I had 5 sectors that I came. I picked up the stocks which were top stocks. Those 5 sectors went away. I sold those stocks. That's how this has been calculated. Now, these companies were actually 70, 78, 79. So what we'll have, when we do this kind of analysis, we'll have to also see that the exit, entry can be sector, exit is immediately if the sector goes out, or the exit can be till the time the stock is at least a buy. And you keep adding new stocks in the portfolio rather than keep getting out of the stocks which are actually good stocks. So there's huge amount of challenges in creation of this as a portfolio approach, and that's the reason I'm saying it's, when we come out with something, it looks very easy, but there are 200 things that you need to think of in terms of how you do productize this. Now, the other thing is that turnaround, for example, when you're turning around, whether the sector is turning around, can I capture a turnaround company within a turnaround sector? Right? Or a Mojo stock will work very well in a turnaround sector. So there are a lot of work to be done.
I'll pick this next question by Pradeep. Why do you strongly believe that the US market is also worth considering, let's say, for the next 5 years?
Well, if you ask me, they have taken such a leap and a lead on the whole AI front. If you ask me, the tariff, and if they're able to control their employment rate and inflation, the extra income that is going to get generated. If you ask me, if that economy wakes up on domestic production, there are huge amount of bets that they have taken out here. A lot of you may believe that what Trump is doing is quite haphazard and chaotic. According to me, there is a symphony behind it, which is a very, very economically driven symphony. I was talking to somebody and, the other day, without taking a name, where I was told that these AI tools that are available, obviously, as you see new and new versions coming out, they would stop giving the latest versions and use it only for consumption in US. So the knowledge gap that they can create is phenomenal. I have not been a very pro-US allocator, but if I were to today see the direction at which they are going and the revolution that AI is going to create and the benefits that it is going to create, I think there is something that you need to always have a leg out there. I mean, that's my personal view. I am not, saying that India will not create those kind of returns, but I think the innovation at which US is going, now obviously I don't believe in the valuations. I think correction is underway, but I think if you look at a long-term story and the long-term innovations that is happening out there, especially if you're on the tech side, right? If I were to do a pure tech kind of a portfolio, I would do a tech portfolio in the US. I will never do a tech portfolio in India. I may do manufacturing portfolios, I may do consumption portfolios. These are my personal views. I may do manufacturing and consumption portfolios out here, but if I were to do tech portfolios, if I were to do, high-tech, innovation, AI, tech portfolios, I don't see why I will not allocate to the US market. According to me, that's where the the world's tech innovation, as the world's tech innovation is happening, that's where the world's tech investment should go. That's my view.
Okay, that's it with the Q&A session for today.
All right. Thank you so much. I'll see you tomorrow as the last session of 2025. Make sure that these offers are ending today. If you're not subscribed, please use these links. These are not available on the website. Make sure that you do not ask us tomorrow to again share the links with you. With that note, tomorrow is the last date. I'm working on 31st of December for you. You better give me that 1.5 hours tomorrow evening at 7 p.m. Thank you.